Hi friends, Namaskar. Welcome all of you to my channel. Today let's discuss about the concept of again stock dividend and announcement how it would affect the each component of shareholder equity like common stock value, additional paid-in capital and the retained earnings. And particularly we know that when the companies has surplus fund, companies would have two options. One is providing dividend, cash dividend to the shareholders, and next one is that buyback share, which is also known as treasury stock. But if the company's cash position is not good, so in that case company would prefer to declare and distribute the stock dividend, which is called the bonus share. So once the company distribute, let's discuss about how it affect the each component of shareholder equity. So today discussion would be not limited to financial management, even though I am taking this overall picture, the question from the fundamental of financial management 11th edition by Van Horn. This is a wonderful book. At the same time, the same type of discussion we also do in the financial accounting, even though that course book may be Porter, Norton, Narayan Swamy and others book. So it's all about the matter of discussion and the context, how we are going to discuss the things. So I hope that today's discussion would be important for financial accounting perspective as well, at the same time financial management context. Okay. Now based on this background, this is the case you are given the market price per share is $60, while stockholder equity, that's a total shareholder equity, we have a common stock at the par is $8. Additional paid in capital you are given it, while total shareholder equity is 12 million. Okay. So when the company distribute the stock dividend of 10%, so what type of working note we need to do it? So first of all, you need to understand this point, friends. So what would be the common stock outstanding? So this is simply, we say that this is the common stock value divided by its par is $8. So you would have how much? This is 2,50,000. Okay. So what about the common stock dividend? That's bonus share. So simply the company is distributing is the that is this 2,50,000 into 0.1, that's a 10%. So point is that when the company distribute, announce the less than 25% dividend, so it is called as a small stock dividend, and beyond that it's called as a large dividend. Okay. So what about the common stock value will increase by how much? So this working note you have to understand first of all, then automatically we could solve this question quite easily. So common stock value will increase by how much? So what about the common stock dividend into our par value? Par value is the 8. So this is 2 lakh. So what about the additional paid in capital, which is known as the share premium, friends? Okay. So condition is that when the company issue the share above the par value, that is the case of share premium, we say that. Okay. So under share premium, how we find it? So common stock dividend, we use the into additions to par. So what about the market price? We have a $60 while its par is 8. So we would have a is the 13 lakh is our additional paid in capital. But remember friends, the common stock value increased by 2 lakh, additional paid in capital will increase by 13 lakh. However, retained earning will reduce by what figure? So again, that is the common stock units share into its market price, market value per share, MVPS. So is the 60. So that is your return earning reduced by shareholder, while the total shareholder equity remain, we can say that constant. Okay, this is the working note. Okay, so what about the case now? Let's talk about its impact now. We already discussed the point. Okay, so after a stock dividend, what will be the value? So simply this value plus your common stock dividend increased by how much? This is 2 lakh. So this will be now how much? This is the 22 lakh. So what about the additional paid in capital? This value existing one, and because of announcement of the stock dividend additional paid in capital increased by, this is the 13 lakh. Okay, but our retained earnings will reduce by minus this figure. But when you sum it from this, when you add it, it must be the same value that is before a stock dividend. So that means our, after the announcement of a stock dividend, even the stockholder equity, which is also known as stock dividend, which remain the same constant. So what about the accounting treatment for a stock dividend in this case? So what about the retained earnings? Look at the point. So retained earning reduced by what figure? Is the retained earning reduced by 15 lakh. So retained earnings account debit. Okay. So stock dividend distributable how much? We already calculated, that's common stock value will increase by 2 lakh. So this is common stock dividend is 2 lakh. Okay. While additional paid in capital, we have a case additional paid in capital, that is the case is 13 lakh. So this is 13 lakh. Okay. So this way we know that as per double entry system, your debit must be equals to credits. Okay. So we see that, okay, yes is the 15 lakh, this is 15 lakh. So this is the story of journal entry analysis recording a stock dividend of 10% at the time of declarations. Okay. So what about the case journal entry recording a stock dividend distribution date when the company distributed? So distribution common stock dividend, we have a 2 lakh, this is the figure. So you can write the, this is 2 lakh, and this is the common stock dividend, and the next one is that common stock. So this is again 2 lakh. This is the at the time of distribution date. Okay. So now let's discuss about what's the key difference between stock dividend and the cash dividend, friends. Okay. So conceptually, you need to understand the fundamentals of a stock dividend and cash dividend. So forms of payment: in case of a stock dividend, company will pay the additional share, while in case of cash dividend, company will disburse the cash payment is there. While in case of retained earning reduce, as we already discussed, retained earning reduced by what is the amount? Return reduced by, this is the 15 lakh. Okay. But in case of cash dividend, again retained earning reduce since the company pay the cash. And what about the paid in capital? Yeah, additional paid in capital, yes, share premium increase, but in case of cash dividend, no change. So what about the investor appeal? Concerning a total stockholder equity, no change in this case, while in case of cash dividend, it will reduce. Okay. So what about the investor appeal? So often signal growth of the company, and the company is not going to distribute the cash dividend, and the company's intention is to retain the profit for the future reinvestment purpose. Okay. And this could be, we say that, attract income focused investors. So some investor may prefer the cash dividend So this is a matter of research about the cash dividend versus a stock dividend. We have to do the research and how it react the to what extent our market price of stock would react. So just say about your reaction hypothesis, we say that. So tax treatment is when we say that often not tax until sale, but however it varies from countries to countries. While cash dividend taxable in the year received. Okay. So common use is that is when we have a like your cash constraint forms distribute the stock dividend. When the companies have adequate cash, they prefer the cash dividend. Okay, so this is the source I have used it for to discuss this concept. So what about the case of cash dividend? Yeah, dividend distribution process in Nepal. So while talking about the distribution process, so board review the financial and the proposed dividend rate, and shareholder approve the dividend proposal. Without approval of the shareholders, that dividend cannot be declared. That is the point we need to understand. So in our case, like you notify the Security Exchange Board of Nepal, yeah, Nepal Stock Exchange, NEPSE, and publish the notice. And again, that is the verify the eligible shareholders before the record date and deduct the applicable TDS before deductions and transfer the cash or bonus share to shareholders and submit the report to the 7 IRD, OCR and the NRB if applicable. So that means OCR is the office of the company register, NRB is our Central Bank of Nepal, Nepal Trust Bank, and IRD is the Inland Revenue Department, friends, and CDS is that Central Depository System. So point is that only shareholder registered before the record date are eligible for record date. And next point we need to understand here, so that is the company deduct the 5% TDS tax deducted at source on the cash dividend for the resident. We say that shareholders, and for non-resident this is the 15%. So we could take the reference of income tax 2058. Okay. So next point is that now let's talk about, let's see in the absence of information or signaling, at what price should the common stock sell after 10% stock dividend, and what might happen to a stock price if there were a signaling effect. So if I'm going to discuss the things in absence of information and a signaling, when we believe that distribution of dividend will not impact the share price, this is about your when we talk about theoretical explanation. So this is the justification from the, we take it that's a Miller and Modigliani dividend irrelevance hypothesis. So concerning this one, our stock price after stock dividend, we could find it. So it's given is $60 per share divided by 1 plus our dividend is 10%. So 0.1 we can use it. So this is we have to use the okay. So this is the $60 divided by, simply we use the bracket 1 plus 0.10. So this is our 54 approximately. We can use it is as a okay $54.55. But when we don't have the signaling effect, in the absence of information and signaling effect, but at the same time when we have a, we assume that yeah there, what happened to the stock price if there is signaling effect, that means, so as for when we talk about the Linter model, yeah, Gordon dividend relevance model, when the company distribute the dividend, it will positively affect the sentiments to the market, and accordingly we believe that the market price will go up. So that is the signaling part. But in practical ground, if the company distribute a dividend, what would be the price of stock, even we do the analyze based on the past data, but practically exactly we can't calculate it. It's very simple to calculate when we don't have a signaling part. But so it's all about your reaction hypothesis. We could test it by using the event study approach like that, friends. Okay. Okay, friends, these are the things that I would like to share today. If you like this content, please like, subscribe, and also share this channel, that is the Finance Guru, Pawan Kumar Jha. Thank you all of you for watching this video. Please take care all of you. Thank you.